Welcome to the Deep Dive. We're here to break down the source material you're interested in, earnings calls, research, you name it, and pull out what really matters.
Exactly. Think of us as your shortcut through the noise. Today, we're digging into Planet Labs PBC, specifically their first quarter fiscal year 2026 earnings call.
Right. We've got the transcript, the details, all based on what you, our listener, wanted clarity on. Let's jump in.
Sounds good. This call, it had some pretty significant points, potentially showing a real shift for them.
Okay, let's start with the headline numbers. Q1 FY26. Revenue was $66.3 million.
Yeah, and what's interesting there is that it actually beat their own expectations.
And it's growth too, right? About 10% year over year.
Yep, roughly 10%. And it wasn't just the top line looking better. Profitability metrics saw a nice improvement too.
Talk about the margins.
Okay, so non-GAAP gross margin hit 59%. That's up from 55% the same time last year. So 4 points higher.
It's a decent jump. Shows better efficiency.
It does. And then there's the adjusted EBITDA. Came in positive at $1.2 million.
And this isn't the first time, is it?
No, that's the key thing. It's their second consecutive quarter of positive adjusted EBITDA. So it's starting to look like a trend.
Okay, but the really big news, I think, was the cash flow.
Absolutely. This felt like a major milestone they wanted to highlight. They generated $17.3 million in operating cash flow.
Which is strong.
Very strong. And even more significantly, they achieved positive free cash flow, $8 million.
And that's the first time since going public.
First time as a public company, yes. Management pointed out this was actually ahead of their own timeline, too. Big deal for them.
Definitely. And underpinning all this, the backlog, how did that look?
Huge growth there. It's now over $500 million.
Wow. $500 million.
Yeah. And they explicitly connected that backlog, that pipeline of signed deals, to accelerating revenue growth down the line.
Okay, so let's unpack what drove these numbers. The defense and intelligence sector, D&I, seemed like a standout.
It really was. Revenue there grew over 20% compared to last year.
And what was behind that? Just more data sales.
It was a mix, actually. Strength in their core data products, yes, but also growth in the solutions they build on that data. And critically, executing on that big new satellite services contract they have with JSAT.
They mentioned some specific wins, didn't they?
They did. Called out an 8-figure ACV expansion that's annual contract value with a European D&I customer.
8 figures? That's substantial.
It is. And it wasn't just data. It included their Maritime Domain Awareness solution, MDA. What's really interesting is how fast it grew from just a pilot program last year.
So quick adoption from pilot to a large operational contract.
Exactly. Shows the demand and maybe their ability to deliver these operational solutions quickly.
And there was another MDA win.
Yeah, 7-figure ACV expansion. This was with a long-term customer, extending their monitoring from land out to sea. Management framed these as, real validation for these downstream integrated solutions.
Okay, moving on. Civil government. How did that perform?
That was actually down year over year.
Oh, okay. Any reason given?
Yeah, they were upfront about it. It was mostly due to the NICFI contract expiring, which was expected.
Right, that was a large one.
It was. But they quickly pivoted to talking about significant new growth opportunities they see emerging in civil gov, enough to offset NICFI over time, they believe.
And they had examples.
Yes. A really big one, strategically important, is the $95 million subcontract for California's satellite data program, the SDPP.
$95 million. What's that for?
It's focused on methane data, using their Tanitor hyperspectral satellite, plus other data.
Ah, so using the new Tanitor capability.
Precisely. They framed it as the first major external buy of Tanitor data, validating that new fleet for environmental monitoring.
Interesting. Any other civil wins?
Yeah, a 7-figure expansion with BKG in Germany. That involved adding derived data products. They call them planetary variables, things like water extent, plus access to third-party monitoring and their platform.
So more sophisticated analysis.
Seems like it. And also an expansion with the Welsh government for agriculture and natural resource management, using their high cadence imagery. So diverse government use cases popping up.
What about the commercial sector?
That was up slightly year over year. They mentioned seeing signs of stabilization there since things bottomed out in Q1 last year. Still some variability quarter to quarter, though.
Any specific examples?
They named a multi-year expansion with OnX, which makes outdoor navigation apps. So integrating planet data into consumer-facing tech.
Got it. Now, this satellite services offering, that seems pretty central to their strategy.
It really does. They reported strong execution on that JSAT contract, where they're building and operating satellites for JSAT.
Right.
And they said they're making solid progress on other similar strategic deals. The key insight here, I think, is how these deals are structured.
How so?
It's not just revenue. These deals are explicitly funding the development of their next-generation satellite fleets, like Pelican and Tanitor.
So customers pay for dedicated capacity, and Planet gets its R&D and new constellations funded?
Basically, yes. The customer gets dedicated, sovereign-like capability, and Planet accelerates its tech roadmap. And then, crucially, that new capacity can also drive incremental data business.
Like the California methane deal using Tanager data.
Exactly. Tanager was partly funded by earlier strategic initiatives, and now its data is being sold commercially. It's a clever model.
Okay, product updates? Anything notable?
They mentioned streamlining the self-service purchasing on their Planet Insights platform, making it easier for smaller users to just get data quickly.
Lowering friction for the smaller end?
Seems like it. And for bigger clients, the platform is evolving to deliver more embedded time series insights, aiming beyond just geospatial experts to analysts who need answers, not raw data.
Makes sense. Any brand new products?
Yeah, they released a new aircraft detection analytic feed. Uses AI on their frequent imagery to spot aircraft globally.
What's the application there?
Things like analyzing patterns of life, spotting geopolitical anomalies, basically making sophisticated monitoring more accessible.
Let's talk space hardware. Updates on the new satellites. Tanager 1.
Progressing towards being fully operational, serving early customers already, increasing its imaging capacity.
And Pelican 2. That launched recently.
Yep, launched in January. It's completed commissioning, and they said it's now providing data to select customers.
So getting data from the new high-res birds.
Right, and they stress the value of the on-orbit experience they're getting.
Yeah.
Over 2.5 years now, with the underlying modular platform that both Tanager and Pelican use, that learning is critical for scaling.
More launches planned.
Yeah, multiple Pelican launches planned for this year. And then additional Pelicans, specifically for that JSAT contract, should start launching in calendar 2027.
Okay, customer metrics. The total count was 919. That was actually down slightly, wasn't it?
It was, sequentially. But they explained it. It reflects a strategic choice.
How so?
Their direct sales team is focusing on larger, higher value deals in key verticals. Smaller customers are being pushed towards that self-service platform we mentioned, and those aren't counted in this specific metric.
So the focus shifts.
Right, and the proof, they argued, is that revenue grew despite the lower count, meaning the average revenue per customer went up nicely, validates their land and expand focus on big accounts.
What about recurring revenue?
Still very strong. 97% of their ACV book is recurring, and over 90% of that is annual or multi-year deals. Average contract length is around 2 years. Predictability.
And net dollar retention.
NDR.
Came in at 103%. Or 104% if you include customers they won back.
So over 100%, meaning existing customers are spending more over time on average.
Exactly. Reinforces that land and expand strategy is working within the existing base.
Okay, let's zoom out a bit. Investor context.
Right.
How did management frame these Q1 results overall?
They clearly positioned it as strong validation of their strategic direction. You know, that shift towards higher value downstream solutions, AI-enabled insights, plus that innovative satellite services model. They basically said, see, it's working.
They seem pretty bullish on demand, too. Very bullish. Used phrases like unprecedented demand, especially from DNI and for those satellite services deals.
And they linked it to the global situation.
Directly. Said the changing geopolitical landscape, the need for security, the kind of capabilities shown in Ukraine, high-frequency monitoring, rapid insights, it's all driving urgent demand.
And that's feeding the pipeline.
Across the board, they suggested. Strong D&I pipeline, strategic civil gov deals like the methane one, and even the refocused commercial team starting to show results.
Did they mention broader macro risks like tariffs or anything?
Touched on it briefly. Acknowledged uncertainty, but actually saw potential opportunities for their tech in areas like supply chain monitoring if things get more complex globally.
Okay, the Q&A always dives into government budgets. What came up there?
Right. NASA budget uncertainty was discussed. Potential cuts are out there. But Planet highlighted their strong relationship and argued their lower-cost commercial approach fits the administration's push for efficiency. So maybe opportunities, even if the overall NASA budget is tight.
What about the EOCL program? There were news stories about potential cuts there.
Yeah, they acknowledged the uncertainty around that specific large government contract. Couldn't give definitive answers, but stressed their strong partnership with NRO and NGA, the key agencies.
So uncertainty, but emphasizing the relationship.
And also the broader government directive to use commercial capabilities. They felt overall U.S. government opportunities, including direct DoD interest in solutions and satellite services, might outweigh risks to any single program. But it's dynamic.
Any mention of continuing resolutions, CRs?
Just briefly. Said CRs usually mean stability, existing programs continue, but it can be harder to start brand new things. Standard impact, really.
Okay, looking forward, how do they connect this quarter to future growth?
This was key. They pointed to the massive growth in RPOS remaining performance obligations, up 262% year over year.
262%, wow.
Yeah, and total backlog up 140%. They explicitly said this gives them much better visibility for future revenue acceleration.
Specifically mentioning timing.
Yes, indicating growth should accelerate further as they head into fiscal year 2027. Supports what they said previously about hitting certain growth targets.
And why was Q1 revenue better than expected? Or was it just one thing?
Multifaceted, they said. Strong sales execution, including landing that big 8-figure European deal. Also, higher than expected customer usage of their platform in Q1.
Usage spiked?
Apparently so.
Yeah.
And also just solid progress hitting milestones on the JSAT contract all contributed.
And for Q2 guidance?
They assumed that higher usage levels seen in Q1 would return to more normal levels. So maybe a bit conservative there.
Anything else on guidance? CapEx.
They guided for higher CapEx in Q2, but said it was mainly timing spending shifting from Q1. The full year CapEx expectation remains unchanged.
And the overall path of profitability? Free cash flow.
They reiterated their goal of achieving sustainable positive free cash flow within the next 24 months. They acknowledged it can be lumpy quarter to quarter because of big contract payments and CapEx timing.
But hitting positive FCF this quarter helps build confidence.
Exactly. They presented it as a tangible step, reinforcing that 24-month target.
All right, let's shift gears. Time for our segment that is absolutely 100% not financial advice.
Definitely not. This is purely a thought experiment, taking some threads from the call and spinning out a potential, let's call it an outrageous but plausible trade idea. For illustration only.
Do not trade based on this. Do your own research. Consult professionals. Okay.
Consider it mental gymnastics based only on the narrative from the earnings call.
So the idea, Planet Labs, ticker PL, based only on this Q1 call, the positive free cash flow, that massive backlog growth, the RPOS jump.
Yeah.
The outrageous but plausible pitch is that maybe, just maybe, the stock is fundamentally undervalued right now.
Okay, walk me through the hypothetical argument.
The argument would be management sounds confident, maybe more confident than before, about accelerating growth. They hit positive free cash flow earlier than expected. They landed huge strategic deals validating both D&I demand and the satellite services model.
So the argument is the story is de-risking.
Potentially. That the strategic pivot isn't just talk anymore. You're seeing tangible financial proof points. Better margins, positive cash flow, huge backlog visibility. Maybe the market hasn't fully caught up to that yet.
So what's the trade?
The outrageous idea could be something like going long the stock, maybe using longer dated options. LEAP PSA calls expiring January 2026 or even 2027.
Why options? Why long dated?
Well, the theory, again, purely hypothetical, would be to get leverage on the potential upside if the market does start to re-rate the stock over the next year or two, as this path to sustainable cash flow and accelerating growth hopefully plays out like management described. It's a bet on that longer-term story unfolding.
So the speculation is the market is too focused on quarterly noise, maybe past misses, and isn't fully pricing in this potential inflection point described on the call. The shift to solutions, the funded satellite model, the operational discipline leading to cash flow.
Something like that. Betting that the narrative from this call, if it continues, hasn't been fully absorbed by the stock price yet.
Okay, but let's hammer this home again. This is incredibly speculative. High risk. Options are complex. Trading individual stocks based just on one earnings call is usually a bad idea.
Absolutely. This is purely illustrative of one way someone might interpret the call's bullish points, stretched into a trade idea, not advice, not a recommendation.
Do your own homework. Seriously.
Okay.
Enough disclaimers.
I think so. Let's wrap up the actual takeaways from the deep dive. Planet Labs, strong Q1 for FY26.
Yep. Beat expectations, hit some big milestones, second quarter of positive adjusted EBITDA, and that first ever positive free cash flow as a public company.
They landed major wins, particularly in defense and intelligence, showed some stability in commercial, and highlighted strategic civil government opportunities, especially using the new Tanitor satellite for things like methane monitoring.
The call really hammered home their strategy. Integrated insights, AI-enabled solutions, and the unique satellite services model. They argued both are gaining traction and proving out their choices.
And critically, that massive jump in RPOS and backlog gives them, they say, much better visibility into future growth accelerating, especially looking out towards fiscal year 2027.
So that's the picture painted by the company on their call.
And remember, this whole discussion was based just on the information they provided in that earnings call. It is definitely not financial advice.
We hope breaking it down helps you understand their perspective. Consider the points, do your own research, see how it fits into your view of the company and the sector.
So what's the key thing that jumps out at you from this quarter? Was it finally hitting positive free cash flow, the sheer size of that backlog, or just the feeling that their strategic bets might be starting to pay off? Something for you to think about.